What's going on, guys? My name is D. Anthony, and in this video we're going to be covering some tips for trading the NQ, which is the NASDAQ 100, in a bull market. So are we in a bull market? Well, it's kind of hard to just blatantly, say, hey, this is the start of a bull market. However, if we just kind of go back the last 3 or 4 weeks and look at what has exactly happened, right? What's exactly happened in the past month is we've reclaimed the daily 50-day moving average. We have continued to push higher from those end of October or early November lows, and each pullback is getting bought back up. Now, mind you, we are getting some days where we have a little bit of a pullback market reversal. There has been some intraday kind of swing pullbacks that if you're a scalper, maybe you could take advantage of. But today's price action is a perfect indicator of how strong the market really is, right? So today is the 20th of November. We do have NVIDIA earnings that are coming out. NVIDIA is pushing up like an absolute freight train today. So do they continue to take this market higher is yet to be, determined. We'll have to see exactly what happens after the bell. But one thing that I do want to kind of point out is that when you are looking at a somewhat strong market, right? What tends to happen to a lot of traders is that they do not believe that the market can continue to push higher. We're all victim of it, right? I'm a victim of it all the time. I'm constantly, debating and going over technical analysis and telling myself, well, maybe it's time for a pullback. Maybe we need to see some of these levels of demand be tested. And lo and behold, the market just continues to push up to the high side. So with that kind of being taken into context, you have to really understand what exactly is going on when the market is strong. So for example, I don't have a whole lot on my charts, but what I do have on my charts is a few supply and demand zones based off of the daily time frame. I've got the 20 SMA on this 5-minute time frame. And you can essentially see that we shoot up right off the bell. And right off the bell, immediately we're over this 20-day moving average. We put in a high here that was tested of a previous area of supply. So instead of looking to kind of short this position back all the way down, the better thing to do would be to remain a little bit more patient and then try to catch that move back up to the upside. So again, what's the psychology? What is the kind of thought process that goes into day trading the NQ when you're in a bull market or quote unquote stronger market? Is you do not want to just short every new high, because eventually you're going to get clipped, right? So once you start to try to short these highs, you're going to get caught in what these in what is called a trap, right? And when you're caught in the trap, it tends to put traders on edge. It tends to put traders in a bad kind of predicament. So what you want to do is find the best possible price that you can get in on off an area of support, whether that's the 20 SMA, whether it's the 50 or the 200, depending on the time frame that you're trading, and you want to see if you can catch these bounces. So if you would just let these things put in highs, pull back into support, look at how we pulled into this 20-day moving average. And although we, kind of wicked below, we held this previous area of resistance that is now acting as new support. And when we start to push off of the 20-period moving averages, when you want to get long, and you can use the previous low wicks as a stop if you're scalping or short-term day trading, or you can kind of use a low of day as a stop if you have a little bit smaller position size. Now, once we do put in a new high and we start to consolidate, well, as long as we're still trading over the 20 and we're still holding some of these, these levels here, we can continue to get back in to the long side. Now, let's say, for example, you missed this pullback and you're looking at this price action here kind of consolidate. What are you thinking to yourself? Well, if we had this previous high that was acting as resistance, we broke out over, and now we're consolidating sideways, what would potentially be the best area to try to get in at for a new potential long position? When we take out this structure, so when structure is broken coming off of a supply zone, again, it's all going to come down to your position sizing, and how much money you actually have on the table is going to determine how much risk and drawdown you can actually put yourself in. But what you want to do in a strong market is A, play pullbacks off of support, or B, take breakouts through a structure zone that is coming off of support. So notice how we were building this floor. Notice how we're coming off of support on the 20 period moving average. Let's say, for example, you're looking to get long and get a better price. You don't want to get long until we break previous structure and come off of a support zone. Once you do, then you can use this whole structure as a stop loss, which would have been 16,000 here, and you could have essentially ridden this higher. Now notice how once we put in these highs, we consolidate sideways. What do you want to do when we're in a strong market is allow it to pull back into the 20 period moving average or a previous area of structure or supplier demand. And then once we push higher, you want to go ahead and get long. So using this same thought process, when would we have been getting long on this next pullback is when we pull back into support and when we start to break previous structure. So that would have been here at 11:35 a.m. and you would have been getting long at a price at around over 16,078, and even that has run 30 to 40 points. So again, allow the pullbacks to happen, ignore the shorts, allow some consolidation coming off of a support zone, and when we break structure or have a significant green candle taking out red off of an area of support or an area of demand, that's when you want to go ahead and get long. So again, the thought process needs to switch a little bit when you're in a stronger market, when you're in a bull market. And again, when we're over the 50-day moving average on a daily time frame, when we're over the 20-day moving average on a daily time frame, we want to be a little bit more long biased. We want to kind of ignore those short setups. We want to kind of let those short setups go, and we want to play the bounces, or we want to play the breakouts through previous structure. So again, I hope this video helps you guys. If you guys want to trade with me each and every single day live, I'm offering something new on Evolution Traders where you can become a member for just $12 a month, and you can trade with myself and the rest of the team each and every single day live. Whether you want to trade with us on the phone using voice or a microphone on your PC, or you just want to tune in and listen and watch my screen, you can definitely do that. But for less than $1 a day, you can essentially trade with other traders who are doing this on an each and every single day basis, so you can kind of see exactly what's going on. If you're a little bit more of a serious trader and you want that one-on-one focused mentorship, I still offer the Gold members lifetime access. I have increased the price by double. My time is just as precious as yours. I only want to work with serious traders who want to actually do this for a profession, a career, or a retirement plan. So again, that option is still available to you guys as well. All of that information is down in the description box below, and I'll see you guys on the next video.